Okay, guys, so I said that I would split out the examples that obviously I'm going to show you of me going through the chart. And firstly, this is cumulative delta. You'll see it on your template. Just basically minimize this, get rid of it, because it's not relevant at this stage. We will cover it a bit later on. Again, it's no magic, okay? It's just a rough guideline of which market orders uh, winning the battle, so to speak, balance, imbalance, that kind of thing. So it's just a different way of looking at the same data you've already looked at on the depth of market. If you've done the footprint, obviously you would have seen it there and so on and so forth. So just put that aside. Don't get, fixated on that, whatever. You might have seen it. Just ignore it for now. Minimize it. This is very much about establishing the market condition. And at the moment, obviously, each environment, it's March. What I've done is I've gone back 60 days. It's plenty of data for me to cover with you. I'll do a little bit of crude oil as well, just to wrap it up. But essentially, I'm going to go through loads of them with you. So there's plenty. It's not like profiles where obviously we're just merging, move on, merging, move on. Here I am going to spend a little bit of time determining market condition. But as with the profiles, I've said it time and time again, and I don't want to, sound like a broken record. I always say this, but honestly, I wish I was told this early on in my career, not to be so obsessive about these lines. I've told you already that the statistics, it isn't perfect. These lines are just very rough guidelines. When I was actually at a proprietary trading firm and I was being shown balance and imbalance. Obviously, it's not something I invented. There's a lot of stuff that I've obviously created my own way of showing you things, but it's happening in the real world, right? I haven't invented how eBay works, how a you know auction market process works in all the many markets I've showed you. It's just real life. All I've done is I've just sort of created a vehicle, i.e., my course, to enable that knowledge to funnel its way to you. That's all I've really done. I've just shown you what's already going on. You probably just weren't aware of it. And, similarly, I say all of this because um, I was shown this, but I was shown it in a very systematic way, is my point. Almost indicator like, even in a top institution. And it took me a long time to step away from it. And actually, in hindsight, I don't think it was ever done to intentionally mislead. And actually, I've had a look. Obviously, I have a lot of contacts, okay, in some of the biggest institutions in the world, proprietary trading firms. I know a lot of them. And I've seen their training material. And it is very sort of methodical and systematic in the way they teach you imbalance and balance. And they're basically teaching it to you fairly similarly. And obviously, I did say to you, my job is to replicate exactly what you get in a professional firm. So I am giving you that. This is exactly the framework that they're going to teach you. How do you tell if the market's gone imbalanced? Well, the VWAP starts to form at a gradient, and obviously we will be developing market orders under the VWAP, and therefore we're imbalanced. The same sort of stuff I showed you, but to maybe 10-20% of the detail that I've been showing you. And more importantly, I'm basically telling you to be very loose with it. When I was taught this, it was very much, nope, when we basically, so for example, here, we've touched the one standard deviation. So if you remember, this is the first standard deviation, this is the zero point 0.5 standard deviation, and this is the 1.5, and this is the 2.0, okay? Now, in the future, I might do some, Sierra chart specific things. Obviously, I'm still developing the course as we do this. Maybe in the future, I'll add in some Sierra chart stuff and I'll show you how you can change all the settings. But at the end of the day, guys, if you can fiddle around with them, but you will see this is the half standard deviation 1, 1.5, and 2, which we've already talked about. It helps us determine the rhythm. Well, the way I was taught is, well, as soon as you see the market develop, some sort of acceptance above here, maybe develop some volume, and it has to be on the sort of one standard deviation, that means we're in balance. Now, I'm hesitant to tell you this, okay, but I'm going to tell you. Basically, you'll see it anyway. If you go into my Discord, obviously it won't be every day, but whenever I'm able to, if you look closely on my day VWAP, guys, over the years, I started off with this framework, okay? And apologies about that, it's late at night. I've said this before when it comes up to the reset period, so that's just happening now. But the way that I've developed is I've got rid of this, I've got rid of this, I've got rid of this, okay? So I only have the VWAP and the second standard deviation band. And there's various reasons for that but I don't want you to do that, because on my weekly, monthly, quarterly and yearly, I maintain all of these. I like to look at this. And the reason for that is quite, look, it's not anything that you need to really be aware of from a mathematical or a statistical perspective, but at the same time, statistics that have more data are more rigorous. So obviously on a weekly institutional horizon, you can call it a time frame. I prefer to look at it as a perspective of obviously, different types of investors, maybe more medium-term hedge funds who are looking to trade intra-week or every 2 weeks or whatever. The horizon's going to be slightly different. Essentially, the amount of data is much bigger than on a day. On a day, right, you've already seen, you might have in the E-mini S&P, a million contracts, probably more than that. Obviously, if you include the whole day, it's going to be more like 1.5, 1.6, 1.7 at the moment. Obviously, it depends on the season and time of year, etc. But it's running around that at the moment. But the point is, when you're looking at the VWAP, if you're looking at it at this point in the day, guys, you've probably only got about 20, at best 30% of that volume. Okay, so you've maybe got about 500,000 contracts. When you're looking at this on a weekly basis or on a monthly basis, guys, you've got a huge number of contracts, and you've got to realize the thing that's causing basically this VWAP to form is the underlying data. What is the underlying data? It's the contracts. It's the market orders that we looked at on the depth of market. Yeah, of course, price is important, but much more important is the frequency, as you saw in the histogram that I talked about. And I know I keep going back to the maths, but look, don't worry too much. I don't want you to worry too much about the stats and stuff. Just remember that obviously the more data you have, it's almost like, if you're trying to predict the next score of, or the next few scores or score of, I talk about cricket scores or whatever, but any team that scores a number, right? And I talked about 200 before. If they've scored 200, 1,000 times in a row, it's more than likely, based on historical data, that they're gonna be around that number, right? On the 1001st. If they've just scored it once, the second time, do you see what I mean? How do you make forecasts based on smaller sample sizes? Obviously, that's an extreme example, but and I don't want to go off track, but it is important because, firstly, it's important because you need to realize that even though I don't use these, I don't use the half, I don't use the 1, I don't use the 1.5 on a day VWAP, guys, I make extensive use of them on a weekly, monthly, quarterly, yearly. Because in a yearly, how many times do you think the market condition changes? A handful. Okay, it's incredibly powerful. And you've got an incredible number of market orders. The underlying data set, millions of individual market orders and contracts. So it's very, very, I hesitate to use the word accurate, but it is fairly accurate reflection of what the rhythm of the market is. But on a day, especially early on, it's changing a lot. over time, because I've watched this thing, I can't tell you how many times, thousands, right? I've developed the ability to just kind of get a feel for, okay, what's the rhythm here? Is changed here without having to see it on the bands. But it's like riding a cycle. You need stabilizers at first, get used to it. But also more importantly than that. So there's obviously the underlying data, the sample size that the bands are calculated off, is obviously more as we head out towards weekly, monthly, quarterly, yearly timeframes. So I pay much more attention to all the individual standard deviations and where market orders are forming, and obviously therefore the imbalances or the failures of the imbalances are much more important to me on those timeframes, at least in relation to these bands, right? But more importantly, and this is a crucial point, again, you don't need to do stats to understand this. Can you see, if you start to develop your knowledge of rhythm on a day VWAP, how much practice are you going to get in? If every single day you're trying to figure out, is this thing balanced? What's the rhythm? Is this thing imbalanced? What's the rhythm? Is it fast? Is it normal? Is it slow? Because can you see, every single day, crude oil, E-mini, whatever it is, you're doing the practice. If you do what I did and you just get rid of these, and you only look at it on the weekly, monthly, and yearly, how often are you going to get practice? Once a week, and let's say you only look at it on the monthly, not once a month, but a handful of times in the month where the condition changes, your eyes and your brain is developing obviously the connections of being able to almost observe it, maybe not subconsciously, but very without thinking much. It just comes straight away. Oh yeah, pattern recognition, almost, you could say. Again, I'm hesitant of using that word because people talk about that a lot in terms of price action and this type of stuff. And obviously, I don't really believe in that. I don't believe the market, because it's just human beings. I don't necessarily believe they follow any sort of price action per se. But rhythm, however, I think it's obvious that the market does follow a rhythm, just because of the way that market orders are distributed over small buckets of time, and that will become clear. I've talked a lot. I just wanted to make that clear, just because sometimes in the Discord you may notice, hang on, Envy doesn't have these, let me dump them. No, don't do that. I would say it took me a good couple of years, okay, maybe slightly less than that, but maybe 1 or 2 years before I became confident enough to drop all of these bands on the day VWAP, okay? The other ones, I look at them a lot more, but that's because I kept them on my day, and over a year or two of watching it every day, day in, day out, I've got so much practice at developing, being able to define market condition and rhythm, okay? So what we're going to do is, apologies, I went on a little bit there, but it was important, I told you all of that. Because even though you might sometimes see me with just these, I want you to understand why for you, for the foreseeable future of your career, I want you to keep these on. And then in the future, if you may, look, there's nothing wrong with keeping them on permanently. But if you then decide in the future, nah, do you know what? I'm getting too distracted by this. Can you see how, so this is a good example where it just pops above the one standard deviation line, the normal trend. It might throw you off, whereas if that wasn't even there, it won't throw you off so much, basically, is my point. So, I don't know. For me, I just find it easier nowadays, obviously many more years into my career, to identify rhythm without them, but again, I do use them extensively on the weekly, monthly, quarterly and yearly, and this has happened over time. So for now, please, if you don't mind, even though you see me without them, I would say for a significant period. Keep them on. Because what's going to happen is if you get rid of them, you're not going to get the practice you need to really understand, like I said, what the market is really trying to tell you about how the volume profile is evolving and sort of the pace of imbalance and the potential for the imbalance to fail. Okay, so let's get started. So what are we trying to do? What I want you to do is, right, so I've given you that list. Look, again, that list is just a very rough guide. I've said it many times before. On a discretionary basis, we're not talking about, I've not talked about this before. We're not talking about systematic trading here. I'm talking about developing as a retail institutional sort of merge between a home trader using institutional tools. You don't have the sort of algorithmic capabilities that some of these institutions do. So at the end of the day, you want to develop that edge, like I said. And actually, it's the final point. I apologize, but it's really important because I have said it before. I've already said to you that if it was that easy, right, to identify this type of rhythm with a algorithm or through some systematic method, guys, there's no point you doing it, okay? I can assure you, some institution out there or some guy out there with incredible programming ability and probably a lot of funding as well and time or whatever it is, and in particular an institution, guys, they're going to eat this edge away like that. You are wasting your time if you think that this is some sort of system that, oh, look, every time we bounce here is perfect and that's it, it's the road to me now identifying the perfect sort of entry. No, it's not that. Actually, it comes back to what I've said many times. We have a huge advantage over machines because a machine will drive itself crazy trying to figure out, is that a slow trend? Have I broken the VWAP? Oh, actually, maybe the slow trend is ending. Do you see? We can use our logic and actually make a discretionary decision. And I love this. I told you when we've got the merges, I love it when it's unclear because that I know, hang on a minute, maybe I can develop some edge over the majority of the market that haven't realized until it's too late. For example, the market's already moved that, oh, this was actually approximately a slow trend. Right, we popped above the VWAP slightly, but we didn't really build any volume above here. For me, personally, as someone who's using my observation and judgment, and therefore I sense a short opportunity here, but by the time the rest of the market and algorithms and so on and so forth realize that, whatever the shape of the profile might be, obviously we're going to have a lot of volume built in sort of this region, and then you could imagine there's going to be possibly and in fact that's not very accurate, apologize, let me just do that again. You'll see where I'm getting at with this. So there'll be probably a little bit of obviously volume there, and then we'll have quite a bit of volume in this region, be like something like that anyway, and then maybe you'll have your your standard deviation in the volume profile. As I've said, the fair price, fair value, the 70% or whatever you want to call it, that a lot of these obviously traders, institutional traders, algorithms, whatever, are programmed to read. Can you see by the time it's gone through the volume profile sort of value area low, as we call it, guys, it's too late. That's why and I can assure you this, if we looked at it on the cumulative delta, which we won't, huge amount of orders coming in because the market recognizes this is imbalance. Guys, you're in up here because you recognize the rhythm was what? Slow trend. This is my point. You cannot begin to understand the edge you can develop. I'm not saying it's easy. Of course, it will take you hours, like hundreds, if not thousands of hours of developing, watching this again and again and again before it used to take me, for example, like I said, maybe an hour to do my prep. Now I can literally come in and I'll see this and straight away I will know, oh, okay, we got a slow trend, and if I've got some contextual reason, I don't know, some, like I've said, some multi-day composite up here, and I'm looking for that, and I'm looking for it to get short, and I see this imbalance, and then I see some absorption up here, the buyer's being absorbed, and I see some aggression coming in. Guys, I'm going to be all over this because I've seen this a million times. But if it's the first time, the second time, the 10th time, the 50th time, maybe even the 100th time, obviously I'm not going to be so certain. It's going to take a little bit of developing, and I hope that helps you, and you don't think I'm just sort of blabbering for the sake of it. Actually, I'm trying to, impart with you some of this knowledge that I've built up over many years, that why it's so important that you approach this in not a sort of systematic manner. You've got to realize this is where your edge is over an algorithm, because this again, I'm going to repeat the point, but if it was perfect, like bounce off VWAP, bounce off VWAP, bounce off VWAP every single time, guys, I can assure you, some institution put a few million into this, develop something, bang, your edge will be eaten up. By the time, algorithm comes in, it's gone. And, like we're seeing on the depth of market nowadays, where obviously machines are incredibly sophisticated at reading absorption, things like that at microscopic level, there's no edge. There wouldn't be any edge here. It's good that it's loose, embrace it, use your judgment, and actually feel good that it's a chance for you to showcase your skill and develop your edge over other traders out there. Alright, so that's enough on that. Let's crack on, and let's look at, so don't forget, what's the purpose of this? We're looking to, on the sheet, which unfortunately I don't have in front of me. Obviously, I just do this naturally now, so I apologize if I use some words that aren't on the sheet, but hopefully it'll be obvious what I'm trying to achieve here. And that is, so we're looking at, obviously we're looking at the market condition. So that's simply balanced or imbalanced, okay? And sometimes I call it rotational, same thing, right? Just rotating. Or are we imbalanced? And like I said, this will form part of my prep every day, so it's important that you identify the condition, and then I'm looking at the rhythm, okay? And then we will obviously try and identify when there's a shift. Obviously we talked about it, right? We called it like obviously a reversal day, where you go from imbalance back into balance, because you might be in a trend and then it breaks away from the imbalance, or the trend, if you want to call it a trend, is fine, I've said, or we can call it, what was the other one? Breakout day. Okay, and that's just literally going from balance to imbalance. So let's try and identify those, and I apologize, obviously I'm doing a lot of days and I'm doing them very quickly. If I forget to identify anything, I do apologize in advance, but let's crack on with that. And just final point is, obviously that's the start of the session. So this session here to here, guys, sorry, that should be a straight line there. That's the electronic trading hour session, okay? There to there, okay? That's the ETH, and then up until 4:15, which is just before the ETH. Sorry, terrible line, but that should be a straight line. And this, I've put it in here. That's the open of the S&P 500 futures, okay? It's at 9:30. So this is the pit session. So that's RTH, and then so this is RTH to 16:15, okay? When you go into your chart settings, you'll see it. And this is the ETH. Okay. I mean, for our purposes, don't worry about it too much. We'll talk about it a lot more later. I just want you to be aware of what this line is, because at the open you do get a lot of market orders coming in. People like to get their business done for the day, or institutions like to fill client orders at the open and stuff. So there'll be a lot of volatility sometimes at the open. So I have marked it, but don't worry, we'll just ignore it for now. So let's go through them anyway. So on this day, we have what's happening here. So I've taken off the volume profile, right? And essentially we've had a fairly, I would say this was a fairly imbalanced overnight session. So the ETH until the RTH opens, we call it the overnight, which I mentioned before, and then our market profile starts at the open, right? But it's nice to see what happened overnight. Can you see? I would say almost that is what? Imbalanced, right? We've had an imbalanced session, and I would say fairly slow trend because what? VWAP, okay? So what that means is, if we come up here, and I know it's easy for me to say this in hindsight, but don't worry about all of that. I don't use VWAP on its own to trade. I just want you to identify market condition right now. We'll worry about trading later. Obviously start to think about trading opportunities. But I don't want you taking trades right now because we're going to use this in conjunction with other contextual clues, for example, obviously where we look for is there static, historical value, fair price, i.e. composites, and we'll also bring in other VWAPs. Right now I'll confuse you if I talk about that too much. Don't worry about taking trades for now. Just start to think about, if I was just trading a slow trend environment, oh look, trading opportunity. Okay, then you had some volume here, and the market continued down. So basically, would you agree? This day was very much you can call it a trend day if you want, but I'm just going to put here imbalanced. And then so that was the market condition. And then what was the rhythm? I'm just going to start putting, what should I call this? I'm just going to put MC and then R, rhythm, okay? Rhythm was slow trend. Guys, if you see it differently, it's fine. Like I said, there would be no edge. If everyone in the world saw this exactly the same way, there wouldn't be an edge, okay? I can assure you. It's fine if you see it slightly differently. You could even argue, right, that over here, the market condition changed. Do you see? Can you see that? We went from a slow trend to a fast trend. Because why? 1.5. And then, towards the end of the day, we broke the fast trend and potentially you could have played a reversion back to the VWAP. Okay? But end of the day, depends how microscopic you want to get. So you could have argued this was a very late reversal day. I haven't really covered this because it happened so late in the session. For me, this was very much, 90% of the day was a imbalanced day. But yeah, like I said, you could quite easily argue with me, hang on MV, didn't we just flip from a sort of slow trend day to a fast trend day? For me, because it's such a short time period, see, you could even argue here. We went from a slow trend and then we flipped to a fast trend. I talked about before how obviously over time I don't use these on a day time frame anymore. This is one of the reasons, because market conditions are changing so much as they would, because obviously there's that many sort of less market orders happening in a shorter space of time. So the market condition is going to change obviously much more frequently, right, than in time terms. On a weekly, right, VWAP, you can still see the market condition change, but it will take longer to do it. Of course it will, because, and this is where it is to do with the statistics and how obviously sort of distributions are formed, is obviously the more data they have, the more it's going to take for new data to shift the sort of shape of it. If it's well established because you've got so many contracts that have traded, which typically happens on a week, month, year, whatever, every time new market orders come in, it's going to take more because it's so well established, because the sort of sample size is so big, that therefore it's going to take more time for that market condition to change. Here, it's changing quite frequently, and apologies if that went over your head, but essentially that is what's happening. But look, the point is, I don't want you to worry about that. For now, I just want you to worry about market condition and rhythm. And Apologies, we've basically taken way too long on just one. Let's get a bit of a move on now. So that was the first day. Let's have a look at the second day. So again, this is all I want you to do. I just want you to get used to identifying market condition and then the rhythm of that market condition. And then obviously if the day type changes dramatically, you can think about calling it a reversal or potential reversal day, etc., because you can trade it accordingly. So very much here again, as we come into the open, so I didn't say this before, but maybe try to think about the overnight session. You know, what will we like? Because typically, as I said, I like to trade around the open. I've mentioned this before, maybe half an hour before the open, because that's when the volume comes in typically. Obviously during volatile periods, stops being taken out overnight, you can get quite a bit of hefty volume overnight, but historically, I've never really, fine, I don't care if that happens, it happens. I don't really get involved in any of that. I prefer to just be involved more during the pit session. I'm very much an RTH trader. However, if something's setting up before 9:30 in the evening S&P, and then obviously before 9 o'clock, just before 9, going into the crude oil pit open, I'll take it. But I like to see what's the market condition as I'm coming into the new day. So in fact, apologies, I didn't say that before. Have a think about anyway, overnight, what's happening here. So again, can you see, very imbalanced, right? Think about the profile, probably quite thin here, and then the distribution will obviously build here, right, in this area. So you can very much see the weighted average price was moving down, 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 which is reflected in quite aggressive behavior of the VWAP. You wouldn't really want to fade this market, all other things being equal. Obviously, we don't know the context. We don't know any of the other investor horizons in terms of, we could have a monthly VWAP crossing here, and you'll see all of this later. This is why I say don't take trades. Just think of condition, okay, for this alone. Clearly imbalanced. And so imbalanced overnight. Rhythm was what? Probably quite a slow trend, right? Because this is the 0.5. And you can see the retracements were fairly deep, right? Then can you see at the open, a huge amount of orders came in, but actually the rhythm didn't really change that much. Obviously, because the price moved a lot, we did get some sort of expansion probably in terms of the spread, right? Standard deviation or whatever. But again, don't worry too much about that. The point is, did we see any shift in rhythm? No. You know, shorting, if you were shorting here, you'd want to be shorting approximately here. You'd want to be shorting approximately here. Okay. You may have tried a short here, and obviously you would have got stopped out because the rhythm changed. So this is a day where potentially you could argue that we turned into what do you call it? You see, I don't even use these day types. I hate them. To be honest, I just think of it as the rhythm's basically changed, and I have an opportunity to get back into balance. But fine, I think I called it a reversal day, right? So do you see? I want you to think about, oh, this could be a reversal day, so a potential opportunity to go to the other side, and actually it'll be the other side there. But don't worry too much about the targets right now. You know, I talked about in the value expectations. It's very similar. Can you see? When you go into a rotational environment, I talked about one of the expectations being going to the other side, right? So, you know, those tend to be good targets, but let's not get into that right now. Point is, all I want you to do is identify market condition. And can you see here, it changed again. We tried to go imbalanced and it failed. And then the market we tried to go, beg your pardon, we tried to go rotational, as in go back, and you see that? We went above VWAP, VWAP became flat, and then, but really we didn't I haven't got the volume profile here, but actually if you look at it, what all the market's done is got attracted to volume earlier in the day, in this region, and it's just testing. Are these players still finding this area fair value? I know this is a bit advanced, but I'm just trying to tell you why the market's done this. It's come back here to test it. Is that fair value? Market said, nope, let's carry on then on our merry way. And then we go back to a rhythm change again in this area. And the thing is, the reason I want you to do this is because what happens is if you can identify this, you can identify trading opportunities. So like I said, if you can identify very early on that, oh look, we've had 1, 2, 3 sort of tests, 2 tests, 3 tests. There's no rule, okay? It's not like a trend line where you have 3 bounces and all that nonsense. It's get a feel for it, okay? You look at order flow, you look at the profile, you look at how thick it is where it's developing, how convinced is the market. It comes with time. But you can also use a bit of logic and common sense and say, all right, we've tested. Maybe the third time we test, there's an opportunity. Here, there's an opportunity. Here, there's an opportunity. Here, there's potentially an opportunity. Can you see the rhythm? Here, there's an opportunity in this area. Here, there's an opportunity, but actually, it's a stop out. We change. Maybe I can get long. Actually, that didn't work out. Fine. And this is obviously very powerful because you see this rotational move failed. We come back, we test again, the 0.5, fine. Let me try to get in balance, shorts again, short here. Because it's similar to earlier in the day, can you see that? I hope this is obvious. And you see it here, you see it here. Guys, great opportunities to short, not, I'm just talking given all other things equal, as in, you know, I'm not taking into account the other 12 pieces of context that I'm going to give you. If only markets were this simple, they're not. Okay, but I'm just trying to get you to identify this condition. So let's move on anyway. So then we come to the next day, and I'm going to try and move a little bit faster. You get the gist of it. Guys, you can get as microscopic as you want, or I like to be a little bit more loose with it, but obviously it's up to you. So again, what did I say? Overnight, very much were imbalanced, right? What was the rhythm? Slow trend, imbalance. Apologies, terrible writing. But that's, guys, write it down. Always when you're doing this, just write down market condition, balanced or imbalanced. Essentially day type. Are we in a rotational environment? Look at the shape of the VWAP. You know, these are the sort of things I'd be looking at. If you're here and you're thinking to yourself, I'm not sure, is that balance or imbalance? Well, guys, look at the shape of the VWAP. The mean is moving up. Market orders. The data is coming into the distribution at a higher level. Is shifting the mean, isn't it? This is why I had to talk about a lot of the statistics, because otherwise you just treat this as an indicator, and I don't want you to. I want you to think about, you know, the market is imbalanced in terms of market orders on the depth of market, aggressive buyers versus sellers. Market orders are coming in on the distribution. The distribution may have started out fairly balanced here, but now we're starting to build here. Okay, so it's becoming imbalanced. And again, the VWAP bands are just there to help you understand how the shape of profile is developing on an intra-period basis. Just happens to be the day. So that's slow trend. Then guys, you've got to be able to recognize this. Why? Because you test it once here, you know, you can either just, obviously, you know, it's the first time we're retesting it. If you've got a strong conviction for whatever reason that we're going to get long, obviously this would be a good area to get long because you've established the rhythm. Then again here, can you see that? Establish the rhythm. Then we do what? Fail. Okay, and we turn into a reversal day, right? So that's a reversal day. Can you see how we go from imbalance to balance? Rotation environment. Okay, rest of the day was rotation. Rhythm was what? 1 SD, not 2 SD. See that on the rotation? Then later in the day, obviously we break out. Okay, so this, ignoring the late day, obviously surge, was very much an imbalance day turning into balance. Imbalance to rotational environment. So very much a change. We had a change. That's just a sign for delta. It just means change in market condition. Okay. So what do we do about that? Well, if you had recognized this early on, there's a shorting opportunity there to take it to the other side of balance. Okay, we'll talk more about trading opportunities obviously when we combine this with other contextual factors, in particular what you've been doing, the merges. Okay, now let's move forward. Okay, so this day was a bit of a day here. And for whatever reason, it's not showing the open, but obviously there was a surge. It was probably something over the weekend or something had happened there, but because it's a Sunday, Monday. But anyway, it's irrelevant. The point is, this is what to me, again, depending on what sort of how microscopic you want to get, what's the market condition? To me, this is a rotation, balance. Because what are we doing? I mean, probably I wouldn't even mark that, but basically we're rotating. As we come down here, then we come up here, I'd probably be looking for shorting opportunities there. I might be looking to get long here or here. Might have got stopped out on that one, but essentially to me is very balanced. And look at the VWAP, flat. Massive clue that this is, obviously a rotation environment. The reason why I say, look, it depends how microscopic you want to get, because obviously for some on a very microscopic level, you could say, well, we had aggressive imbalance, which failed, and then we went rotation. Okay, but obviously to me, I'm not going to look at it that way. It's too smaller time horizon for me. For me, the way I like to trade, that's probably, you could even mark it like that. It's just a very rotational day, which is great, because then I know I'm looking for mean reversion opportunities in line with my other context. Okay, so let's move on. Apologies for that. Sorry, it's because I'm using this marker at the same time. It's trying to get 3-4 different types of mouse buttons going at the same time. Alright, so now we come into this day. Again, I'm not skipping days the same way I didn't skip any composites. I want it to be challenging. Throw any of these at me and I'll tell you what I think the market condition is, and like I said, I'll make a decision and I'll go with it, because that's my edge. You have to have 100% confidence in your edge and let the market teach you, let the market tell you. Obviously I'm here if you show me and say, look, Envy, I thought this was the market condition today, what do you think? I'm going to give you my opinion. But as long as you're not, so I said this before when we did the composites, so for me, very rotational environment, and then maybe, it changes slightly there. But the point is, if you're looking at the market up until this stage, and it's rotation, right? At the end of the day, even if you look at it slightly differently, so you look at this leg, this leg, this leg, this leg, do you see? You've got a couple of extra legs there, but you say, Envy, that's how I see it. I won't say to you, nah, that's wrong. Of course I'm going to say, yeah, looks reasonable to me. It's a rotational environment. If you start saying to me, oh, I see this as a imbalanced day, obviously I'm going to say to you, like if you try and merge balance here with balance here, and you say, oh, I'm going to merge those two. All right. Clearly something we're not, I'm not explaining it properly. We need to sit down again, and that's fine. Don't worry about it. It happens. But generally, I said this before in the merging, just be rough, because you will gain an incredible edge then. And by being loose, potentially, if you do it correctly, in terms of at least relative to how the market eventually sees it, you're going to have an incredible edge. So I hope that you see that. I hope that gives you confidence to just make decisions, okay? So here, what happened? Here for me, initially the market condition was balanced, right? Or rotational or whatever. So when we came up here, we came down here, I probably might have been looking to fade the market as we sort of broke this little microstructure here. We'll talk a little bit about this later, don't worry about this too much. Might have been able to get some longs in. Then, obviously, look, the rhythm was 2SD, wasn't it? 2SD, second standard deviation. Here I agree, we did break it, but then we came back in, and really, I would say, that break was on very little volume. It's not like we stayed up here for ages and we built volume, market orders. We didn't. Really, we flicked back very quickly. I'm not saying I would have got short here and allowed it to go against me. Everyone's different. Risk tolerance, whatever, order flow that you see, etc., etc. Conviction. This is why no two people will ever trade the same way. You'll never get the same entries. But approximately, there's a good chance, a big percentage of the time, we could be reading this as a rotational market. And in particular, if you think this has gone up and maybe your rotation might be failing, look how quickly it goes back into rotation, as in from imbalance and then rotation. If you class that to be an imbalance, again, it's judgment, isn't it? So we come back into rotation, but something has changed, hasn't it? Because look here, we go up, we test it again. Nope. Okay, so it does ever so subtly change from a rotational, in my opinion. Okay, and you see, the thing is, as long as you have logic behind it and it's not wild, it's okay. Okay, generally you're gonna be okay as long as you apply some decent logic to it. Because think about it, my logic is, well, I've just gone up here, then I've just obviously gone sort of imbalanced up, imbalanced down, imbalanced up, which is rotation essentially, right? We're going up and down, and the profile is obviously very balanced. We're going up, we come back down. Do you see, according to my rhythm, I should be doing what? There. Clearly something has changed, okay? We've turned into a very slow trend, okay? And in fact, you can see it. It's very subtle, okay? What should have happened is this VWAP should have been pretty flat like that had we have continued the rotation, but it wasn't. You see, it's got very so slight angle to it, and that's because the market condition changed. But there wasn't an opportunity to get any sort of trades in here. It was too late at the end of the day, but the condition changed, in my opinion, probably somewhere around here, because we tested it, and then you could argue it happened there, but then the second time we tested it and failed, clearly the rotational ended there. So we went ever so subtly from rotation to an imbalance, a slow trade imbalance. So you can see it's almost like a breakout day, but it wasn't very aggressive, right? We didn't really have a fast imbalance. So hopefully that makes sense. Let's just move on, because obviously we've got a lot to cover. Okay, I'm going to try and speed through some of these, because obviously like I said, I've got a lot of days to cover. And hopefully, because I went into so much detail in the early ones, so there I would call that a slow trend here, and the slow trend broke. VWAP went flat. Okay, so we had a slow trend imbalance, market condition was imbalanced, slow trend. Then we went rotational because the VWAP broke. Okay, we went to the other side of value, didn't quite make it to the second standard deviation. And then we tried to go in balance, and the VWAP became very flat. But then look at this. Do you remember I talked about this in the earlier section where I was describing how, look, we're building value and then breakout. So you could argue we almost went from imbalance to balance to, again, imbalance, because we just basically built a lot of value, in this region. And then we just broke out and we came in imbalance, and then the imbalance turned into a reversal later in the day. So actually the imbalance was more like a fast trend. Then the fast trend just ended, and again, any attempts to stay imbalanced in this area failed, and boom, market recognized that and shot up. So hopefully that makes sense. You see, they're not, you could have, this is why I'm showing you this. Because even though in theory, everything in the books that you read is all perfect, yep, trend day imbalanced, and if it fails, we turn into a reversal day and then we stay in balance, rotational for the rest of the day. Complete and utter rubbish, guys. Can you see how many times we change market condition here? It happens. You've got to accept that. Sometimes the market is going to change condition multiple times. Doesn't matter. You can't say to the market, oh, sorry, do you mind? And look, I'm not trying to patronize anyone. Obviously, I'm trying to get you away from retail thinking where everything has to be according to how some indicator told you it should be. No, and I've talked about this a lot. You have to be able to adapt to changing market conditions or you're going to get killed. Volatility can change in an instant, and that's essentially what's happening. Look here, you got range expansion, and then we change, but then we die down, don't we? And it changes into a very sort of more damp environment. And this is really reflected where the mean is shifting and then it goes flat. You have to be able to recognize this, okay? And what's going to help you do that is by recognizing the change in market condition, okay? So here we had quite a few changes, early on in the day, like I said, we had some imbalance, then we tried to go rotational, then we went imbalanced again, and then the imbalance fell and we went rotational again. Multiple changes. So what? I deal with it. I accept it, right? I don't try to force my sort of preferences on the market. No, I want it to be just a couple of market condition changes. Guys, if there's 5 condition changes, I'll deal with it. Like I said, over time, I have now developed a much more very loose attitude towards the day time frame. Like I said, I don't necessarily look at this stuff. I'm going to be honest with you, because then it just allows me to be quite loose here. Do you see? I can be much looser. This is very advanced. I don't really want to get into that right now. I want you to very much look at all the changes that are going on, because like I said, and I apologize to repeat my point, on the higher time frames, I am incredibly, I place a lot of importance on all of these market condition changes because it's happening over many more contracts and the sample size is bigger, and I find that it sticks a lot more. Obviously on the day time frame, at least on a sort of in a time basis, condition changes are happening very frequently. So I don't, but like I said, I want you to learn, and therefore I want you to just accept it, and it'll be good for you to see condition changes can happen. This one I'm just going to do very quickly. Apologize if I miss anything, but look, rotational environment overnight, right? Then what is this rotation environment? I mean, okay, it's the early market orders. Obviously, it's a bit, in terms of the formation of the standard deviations, it is a bit volatile because obviously we've only had a bit of data come through. As it settles down and more data comes in, I think you could argue that we're settling into sort of a first standard deviation rhythm, right? But then what happens? So we come back, we test the VWAP. According to the rhythm, we should have come down here. We didn't, right? We bounced. What happened? Failed. We bounced. So clearly, slow trend. So we went from imbalance to slow trend. All right, so that was a change there. Again, I'm going to obviously just skip through as quickly as possible. Just want to give you guys a wide variety, and show you that I don't, shirk any sort of challenge when it comes to this stuff, because end of the day, I trade every day. I'm going to face challenges like this every day. If I say, nah, actually that doesn't look that good, I don't know, I wouldn't ever be able to trade, because then, I'm going to be looking for things that don't exist. Perfect. End of the day, like I told you, I embrace it. I like it. I like to have some sort of logic that I have to apply, because I'm not relying on an indicator to do a job for me. End of the day, it happens in any job. If you want to get anywhere, again, I'm not trying to lecture anyone. I'm trying to help you to move you away from the mindset that you may have found in, obviously the retail sector, and try and give you this level of institutional thinking, which is the same as in any job, right? If you want to obviously get ahead and develop edge over your colleagues, because you've got to do things differently to them. You've got to start applying a bit of out of the box thinking. And it's not that hard, in my opinion, once you've seen it, right, a lot of times. But name me any industry that's different where it doesn't take time to develop that skill. So again, here to me this is very rotational. Okay, forgive me, but I'm not going to go over the rhythm every single time. You get the point. We started off very rotational, probably not 2 SD rhythm, more like 1 SD, 1 to 1.5, right? Then something changed here. We didn't make it to the other side. We should have. We didn't. Boom, broke. Volume built, and we went almost fast trend imbalanced, right? That's my take on it. If you've got a slightly different take, it's fine. You can show me. If you're unsure, I'm happy to just have a look at it. But as long as you don't do anything crazy, like say, no, Envy, yep, agree with you that, this was a rotational day, but actually, no, it stayed rotational here. I mean, obviously, I think I probably will say to you, no. I would suggest, and you're going to see it, you'll have a balanced profile here, and then you will, towards the end of the day, start to build quite a bit of market orders down here in this area. And obviously your balanced profile will no longer look like a balanced profile. It's going to look like maybe a double distribution and so on and so forth. So it's going to change shape from a balanced profile. So let's move on. Okay, so maybe I'll just probably won't even mark some of these days, so I can just cover a little bit more ground. That's obviously a balanced day where the rhythm is very much a 1 standard deviation. Would you agree on this day? Let's move on. Okay. Apologies, I know my head probably covers some of this. This is very much started off as it's an imbalanced day. Obviously, we spent the whole day above the VWAP. There's not going to be many people fading this market, guys, I can assure you. It's a very imbalanced market. There's probably quite a bit of aggression coming into the market. It could be bigger players, which is what typically happens on imbalanced days. Because what is imbalance? Aggressive market orders, aggressive buy orders, or sell orders. So typically it does tend to be sort of longer term time frame investors. Okay, we call them OTF, other time frame, as in higher time frame. We'll talk a little bit about that later, but typically it tends to be sort of bigger investors that are holding, buy and hold, and so on and so forth, especially in the indices in the S&P 500. Obviously, it's very popular for buy and hold strategies, etc. So yeah, the rhythm obviously changed slightly, but this is why it's important to recognize that you're in an imbalanced environment, because what happens is here you start to go slightly faster. It's just a 0.5, or you could even argue it was the 1. I'm okay with either. Do you see? In fact, I'd be quite happy if you said to me, nah, Envy, I think it's the 1. Because to me, I'll be like, yeah, maybe this guy's getting it. You've got to be loose. You've got to be loose. Okay? But the danger is, if you hadn't recognized that the whole day is above the VWAP, as you see this break, you could class this as a reversal day, right? And try to take short positions here. And yeah, you might have done all right this time, but it's dangerous because the whole day, guys, has been above the VWAP. So actually the underlying foundation of this day is very much a trend day and a slow trend day, but at points the rhythm increased slightly. So just because it breaks this sort of rhythm in this period, can you see actually, hope that's clear, the overall is a slow trend. So you would want to be very careful here. If anything, that would be a great opportunity as it turned around to get back into your imbalance. And obviously we'll talk about this. Hopefully you'd have some sort of contextual level down here, maybe some sort of big multi-day composite or whatever it is, or maybe some other longer time frame VWAPs and whatever, which we'll talk about a little bit later. Okay, this day was just obviously rotational and then it became imbalanced. Okay, so a breakout day, classic breakout day, right? Rhythm was, and don't forget, I want you to mark the rhythm. I haven't got time to do every single one. Some of them are pretty obvious. So this is probably a 2SD, fading opportunities, right? You might have faded that. What happens when you break out? Try and you exit. Do you remember what I said? The strategy is exit and then try and establish. What's the rhythm? Well, it's probably more like a fast trend or some sort of normal trend. You try and get some longs in, but my point is not, get your longs in and I want you to buy. No, I want you to just recognize that clearly this has become a breakout day. Fine, I accept later on in the day came back to balance. Okay, but it's not the point, guys. Like I said, conditions can change multiple times throughout the day. The textbooks will say balance to imbalance. Breakout day, job done. No, we clearly came back here. The breakout failed, essentially. This imbalance, the market couldn't find value right up here. Tried to build some value, failed. You know what? Nah, didn't work out. Let's just get back to the VWAP or the VPOC or whatever you want to call it here, the mode or whatever. Essentially, the market's just come back to the established value from earlier on in the day. This is just classic auction market theory, so I'm not going to go over that again. We've discussed it quite a few times, obviously, in stage one. Okay, so that we tried to form a rotation. Obviously, we were imbalanced down. Then the imbalance down failed, and the VWAP tried to go flat, but the rotational day also didn't quite happen. So actually, we went from imbalance to imbalance the other way. Didn't even put that on your list, did I? But it's exceptionally rare that will happen. But obviously, when that happens, is it any surprise we have a powerful trend day or an imbalance day? No. Why? Because so many people got aggressively short overnight, bailing. Okay. I see it, but it's obviously not a typical day type. For you to go imbalance one way, then imbalance the other. It's more typical to build up some value overnight from which you can build a base off to keep consecutively building value up and up and up. I'm not saying it's impossible. Obviously, it does happen. I'm just saying it's not as common. That's all I'm saying. But again, don't take my word for it. As I said, just observe it over your next few months as you continue to learn. So this day was very much a slow trend imbalance, which failed, right? And then we kind of went rotational. So it was a reversal day, wasn't it? And then it kind of just, even that reversal petered out and we kind of just came back to balance. And you see, we came back into previously established sort of areas. So in theory, do you know what? You could even argue, I'd be happy for you to say to me, do you know what? No, NB, that was a larger rotational day. Okay, got no problem with that. Just depends on your perspective, your horizon, right? If you don't like a multi-day hold, you may even take some shorts there and then look to hold this multi-day. Again, it just depends, right? What your sort of horizon is and stuff. Everyone's going to be slightly different, or how you see it on the day. Everyone's going to see the sort of rhythm slightly differently, but typically you should be able to identify balance or imbalance, most of the time, fairly sort of well with me or someone else or whatever. But it's the rhythm where really you can obviously sometimes have differences of opinion, and that's fine. Like I said, that's healthy. You're going to be able to develop an edge, that way, because you might have spotted something that I haven't, the rest of the market hasn't yet, but goes on to spot. Like I said, when the RTH opens, you've already spotted it, boom, it's your edge. That's where you make money, doing things differently, out of the box. So this was very much a slow trend overnight. Then we kind of just increased it, didn't we, to more of a normal trend. rhythm became, the imbalance became normal. Okay, so I've got about a month left to do. Like I said, I don't want to skip any. This was very much a rotational day and then breakout day, right? So again, I'm not going to mark that one. This was a funny one actually, because we tried to go slow trend. So, you know, obviously once you've established there, you might have had some shorting opportunities in here. Clearly, this rhythm, yeah, it kind of changed, didn't it? Kind of tried to go rotational, and then it broke out again. So it was almost like an imbalance to reversal to breakout. Can you see that? Does that make sense? You got imbalance failed. We go a reversal day in the sense we tried to obviously go rotational, but then the rotation failed and we just went into a breakout day, right? Because had this rotation succeeded, we would have expected that to obviously go there, right? Simple. You know, I've talked about this a lot, and I know I'm pausing here, but I cannot tell you how important this is. You may have heard it talked about before. You know, no indicator in the world is gonna really, in this way anyway, help you identify market condition as well as you can. Not in any way that there might be something out there, obviously, and obviously algorithms are doing it all the time. Machines are obviously doing it all the time, trying to sort of establish, you know, are we in value or are we imbalanced out of value, seeking fair value elsewhere, but not in the way you're able to do it like this. Because look at it. The reason I say that is look at the market. Is it perfect? No, it isn't. It's very messy. It can be very messy. Okay? It's very messy. But if you can somehow see beyond the chaos and just look at it and think for a moment, you know, maybe. So let me give you an example. Maybe this was a slow trend and it just overshot and therefore I got a shorting opportunity there. I'm not saying I would see it that way. I'm saying you might see it that way. Can you see? Got a great edge because when it comes back, you recognize that for what it is. It was just an overshoot and barely any market orders took place here. I'm not saying that I've recognized that. I'm just trying to give you an example of how this stuff, because you're using your logic, incredible edge. Because by the time, and I said this before, over here you may have some sort of fairly balanced profile, right? By the time this sort of thing is broken, and obviously ideally that would be to prove my point, and I showed this to you before, obviously the value area low might be down here, for example. By the time the market recognizes it, you're already in, right? That's what my point is. I keep saying it, but just embrace it, you know. Don't worry about it. As long as it's approximately right, just go for it and learn from the market feedback. And I assure you, you will get much better at this stuff over time. You see how I'm just with ease and I'm confident. If someone comes along and says to me, no, you're wrong, they better have a very good reason for why I'm wrong. They better show me in the profile what's wrong with my identification of market condition. That doesn't mean the next day or the next pit session or whatever, if the market proves me wrong and that other person who told me I was wrong right, that I'm going to say, oh yeah, there you go, you were right. No, nonsense. I'll still think I was right as long as my logic dictated it. You know, for example, obviously if in this type of environment I'm saying, no, I think we're going in balance, when clearly we got a flat VWAP, right? The means staying put, balanced profile, fine. But if someone tries to, obviously, let's say I do think this is rotational, and someone says to me, no, it's in balance. I don't care if, you know, when the RTH opens or this happens and it does eventually go, it's just pot luck. End of the day, I'm not a gambler, right? I don't care if they end up being right or wrong. I know that my edge will play out over time, and eventually it'll work in my favor, because I can't give you the exact number, but I don't want to say 9 times out of 10, but because obviously expectancy comes into that, and I haven't talked much about that, but how much you're taking on every trade will obviously impact how many times you need to be right, win-loss ratio, stuff like that. I don't really want to get into it, but the point is that, according to my edge, if I identify this as a rotation and I get the rhythm right, so either obviously 2SD here and, let's say it did pull back to the 2SD and I'm looking for opportunities here. Enough times, if I take enough out of the market, I know I'm going to make money over time. So I just stick to it, right? Again, you'll develop this over time as you develop more results and you see this playing out, it'll give you more confidence. So yeah, that was obviously a rotation environment there. This was rotational, and then we broke out, in my opinion. This was just a clear imbalance day, right, guys? Fairly slow imbalance initially, which you can see because the VWAP did start to slow down, and then we picked up the pace a little bit, and then we went from slow trend to normal trend, very much here. So you might have had an opportunity to get long there. Once that was established here, we went up, came back, gave you an opportunity to get long. Given, obviously, if you had the contextual reason to do that, which we'll talk about a bit later. Okay, so this day was very, you could see it. Again, you could see this differently depending on obviously your time horizon. I would probably argue that I'd be happy for you to say to me it was a fairly, rotational day. However, because obviously generally I'm looking at the market, on a sort of into the pit session open, for me that was very much imbalanced overnight. Fairly aggressive imbalance, a normal trend, but more aggressive than normal, and you can see the VWAP was quite, the average was shifting at quite a decent rate. The gradient was quite steep, and then we kind of broke, didn't we? So potentially we went from imbalance here to rotational, so a reversal day. It was very much a reversal day for me, where we established, some sort of, we tried to sort of go in balance, trend, whatever you want overnight, and then just kind of fell away, didn't it? We didn't really do anything the rest of the day. Had a very balanced RTH profile. So, and then I agree we had a little bit of volume towards the end here, but essentially it was very much a failure to go unbalanced and therefore a reversal, in my opinion. So hopefully that makes sense to you guys. Okay. Sorry, I know my head covers some of this stuff possibly, so I can't actually see myself right now, but I think it does. Then we had this imbalance day there. Okay, bit messy, I agree. Kind of rotational overnight, bit messy, and then we started to. Do you see? It's not that difficult to identify, guys, because here you've got what rotation. You could argue 2SD, 1SD. I'm fine with it, whatever you want. Did it even pull back here? No, it didn't. Kept going up, kept going up. We started building value here, where we've built value before. I can assure you the profile would have started to build there. Guys, essentially breakout, isn't it? Went from reversal potential to breakout. That's my take on that. Remember, market condition and rhythm are the most important things first, and then you can worry about, is it a reversal? Do I have opportunities to play a breakout reversal, etc., etc. They do tend to be quite good moves, obviously, because when market conditions are changing, typically people are trapped, aren't they? If you think about it, like we said, when you saw the market condition changes, a reversal day, breakout day, you'll be exiting your position. That was part of the strategy, wasn't it? The plan, the suggestion that I gave you. So you can you can imagine you're not the only guys that are going to be doing that. There's going to be a lot of other guys doing that as well. So here we were probably quite rotational, and then obviously we went into some sort of slow trend, right? So you could argue kind of some sort of breakout above this overnight value, but it's pretty tame, wasn't it? Didn't really, and then even the breakout failed there. So you kind of had you had one market condition change and then back to the sort of overnight value there. This is why I said what I said before, you're going to get sometimes multiple condition changes. You just got to live with it. You got to adapt to it. If you expect it to adapt to you, you're finished. You're not going to make it in this game. And I learned that the hard way. Believe me, even I was stubborn, and I thought, nah. In my training, I learned that it should do this, it should do that. No, I very quickly learned that, market will do what it wants to do. It's people. People do what they want, right? How predictable are people, even if they promise you things? I'm not saying they don't always pull through. They pull through enough, and the market kind of, if you have a good understanding of value across all different perspectives and there's opportunities, generally it does do what you think it's going to do. But it can also be unpredictable, like people. And why not? Because it is people. That's all it is. Market's not some sort of ethereal entity. It's just people. So sometimes it can have condition changes more than you want it to. It just happens. Deal with it. Okay, so here as well, I'd call that quite rotational. Although, like with composites, you could argue that, we went rotational and then the rotation kind of failed and we tried to go imbalanced here as a normal trend, and that failed, and then we went rotational again, right? So I'm happy with you doing that. Like I said, it's a judgment thing, and obviously your horizon, if you were taking little trades here, that's fine. I've got no problem with that. Okay, this very much started off as kind of a slow to normal trend, and then rotational, and then the rotation failed. Okay. This one was clearly a reversal day, wasn't it? But we had kind of a slow imbalance, but then it failed. And you got opportunities to trade this reversal back to the other side. Okay. So it's good to identify potential reversals, because obviously you can take advantage and get on the back of, piggyback the reversal. People exiting. There's going to be a lot of shorts here, aren't there? Shorts, short, 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 short. Boom. A lot of people getting out. Okay. Take advantage of that. But don't take trades, please. I know I've said it before, but don't, because you're missing it. This is just to get you identifying market condition, rhythm, changes in market condition, and so on and so forth. When we mix this up with composites and other stuff, that's the time to really, and you'll see that. This was very much a rotational day, easy one there. Okay, this one started off rotational, went in balance, breakout, and then the breakout went reversal, right? So I'm going to shoot through these. What I'm going to do is I'm not going to do, I realise, because I've gone through this at a lot of detail, and I hope you see that. I think I've covered pretty much what I wanted to in this. I don't think you're going to get much out of crude. You saw a few of the crude examples that I showed you on the slides anyway. What I'll do is don't worry about it. In obviously when we combine this with the composites and we start looking at contextual trading opportunities with two combined, I'll do a lot of crude oil there, okay? So don't worry, I'm going to mix and match it. I think that's a better way for me to do it. You're going to get much more out of it. Here you've got plenty of opportunities, I think you're getting it now. Essentially, yeah. So we said already, can't remember if we did this one, but this is just rotation, right? Fairly easy. This one is a slow trend, right? I would say. And I mean, there was a look. You could argue with me and say, "Hang on, MV, that was a normal trend there." Yeah, fine, got no problem with that. You could argue that that is. Don't forget, and I don't want to. I'm hesitant to tell you this because I don't want anyone to get rid of these things, but don't forget, I don't have this on my day VWAP. So I wouldn't even. For me, this is very much a trend. It's just a trend. This is why I started to become very loose with it. 'Cause too many market condition changes in the day. It's up to you. I want to teach you the framework that I was taught. I always said to you, you're paying me to replicate what happens in a professional firm. I hope you can see this is better than what you'll get because I'm giving you that. Plus, I'm giving you my take on it. My take on it is eventually I got rid of this on the day VWAP because I saw these, condition changes happening constantly. I was like, no, personally, it's a bit OTT, but that's just me. For you, I want you to go on the journey. I've said it many times. It's the observation where you're really gonna excel, So I hope you understand. I'm trying to help you. I'm not trying to lecture you or just basically be difficult or make your life hard. I'm not. I'm actually doing the opposite. I'm trying to make your life easier in the long run because I know that any of you watching this, you can be incredibly successful if you just, get out of that head, the mindset, sorry, of, no, it's got to be perfect. There must be something out there that tells me exactly how to identify what envy wants me to identify. No. You go around in circles, you drive yourself crazy for many, many years and it won't exist and you'll come back to this. I can assure you. So if you can, just try and be loose with it and just do it, in a way. And that's good, isn't it? At the end of the day, you don't have to stress yourself out thinking, did I get it exactly right? Oh my God, I don't know. My hypo's wrong because this. No, go with it and learn from the feedback the market gives you later in the session or later in the week or whatever it is. Here we've very much a slow trend, right? Good day, plenty of opportunities potentially, getting long. Once we established it earlier in the day, we pulled back to it, get long, pulled back to it, get long, pulled back to it, get long, maybe get stopped out, although this was later in the day. We'll talk about this, Obviously I'll get you placing trades. Don't worry, we're not far away now. But you've got to combine this with composites. Then there are lots of other stuff, obviously all the VWAPs that I need to bring in. But again, I don't want to put you off too soon, do I? I want you guys to stick around until the fun and games really begins. But no, it's fine. Look, if you do this properly, you're going to get a really good feel for market conditions. And when I throw in the weekly, the monthly, the quarterly, the yearly, you're going to have done this so many times. This is why I want you to practice just here. Then it will fit in nicely. So here, obviously, we had some imbalance. Broke, didn't it? Maybe a shorting opportunity there to the other side, and then we just went rotational the rest of the day. Reversal day. That's fairly straightforward. Guys, can you see I have not skipped a day? Every single day I have identified in one of the most crazy markets we've had. I'm able to do it. Because I have confidence. It's not that I don't care what anyone else thinks, it's that I recognize to be successful in this game, I'm going to have to make decisions, tough decisions, right? And go with them and learn from them. And eventually my decisions will get better over time. And they have, right? My sort of results show that, but it didn't happen overnight. The process was, I just had to kind of sometimes make a decision. I said this so many times. It's funny, right? I said it so many times in the composite merges that just make a decision as long as it's logical. So this was a tricky one actually because we tried to establish some sort of rotation, but to be fair, it didn't really even establish any rotation. We just kind of tried. Look, went down, imbalanced up, and then really to establish rotation and the VWAP to go flat, which it kind of tried to. we would have really needed to test this side. So really, it didn't really do anything overnight. Kind of went down, went up. I guess, on a second look at this, what's actually happened is, so we had an imbalance, fell down, that's fine. And do you see what happened? Basically, we went into a normal trend. The normal trend failed. Then it went into some sort of rotation stroke slow trend. Then the slow trend broke out and we went fast trend. So I think probably you could rightly argue this was a trend day, but a very, very sort of rhythm changing trend day. Does that make sense? So we're pretty much, can you see we hardly traded under the VWAP the entire day? So to me, this was actually a pretty solid trend day, right? All the volume is above the VWAP. But what happened is the rhythm kept changing, right? So we went normal, slow, fast. So we actually had 3 rhythms in the day. So, make of that what you will. Potentially, that you might have tried to get long at the open, which clearly a lot of people did because there was a quick bailout there. Then we kind of just turned to mush around the VWAP. Then we made another attempt and we took off. So you might have had some fast trend opportunities there. I know I'll be honest with you, a lot of guys don't like to trade off the VWAP because they see it as quite a balance because it's the average. Personally, I don't. I like to trade off it. All right, so we can talk about that later when we talk about actually getting into trades. But so for me personally, if I felt that this imbalance was going to maintain, I might have tried to get long there. But obviously, I don't know. I can't say. I don't want to pretend and say, yeah, I would have. I don't know. Depends on all the things I'd be looking at. What's going on all the other horizons. Right, guys, so we're almost there. Just a few more. I'm sure you're looking forward to hearing the end of my voice. But we are almost there now. So, very similar, wasn't it? This and this, where we spent the entire day. Sorry, let me just thicken up my pen. I apologize. Really, we spent the entire day, here was above the VWAP. We've already talked about this day. I'm sorry, that was a terrible drawing, but above the VWAP. Here, same thing, guys. Can you see? But again, we had rhythm changes. So it was kind of like the 0.5 and then the VWAP, which is fine because I do consider them both to be slow trends. Then we kind of tried to establish normal there, but it wasn't as bad as this one. This one, obviously, we went normal, slow, fast. This one was fairly slow the whole day. Can you see that? 0 to 0.5. Okay, and let me have a look. Actually, I'm just looking at the thing. Yeah, slow trend. If you see on your sheet, it will say 0.5 to the WAP. WAP is 0, essentially, right? If you look at your distribution, it's basically your 0 standard deviation. In theory, of course, there's no spread. If you have a sort of sample coming at the mean value, then obviously the standard deviation is going to be 0 there. So it's in theory it's 0, but yeah, hopefully that makes sense. Essentially, that's pretty much a slow trend day. And the good thing about that is, obviously if you've got a very strong conviction to get long, you can kind of recognize. Do you see you can get, potentially you could take some longs in this region, and then as it comes back, you get long there. Just saying, on a VWAP basis, obviously, like I said, don't take these trades. To me, this was very much, could argue, yeah, 2 ways. You could either say it was rotational, or, again, as I'm coming into RTH, I would have seen this as a normal trend failure. Okay, boom. And believe me, when you're watching this stuff, it's quite clear that many people are watching the same thing, because you will see the order flow really speed up here. And obviously that's people exiting. lungs overnight or whatever it is. So sometimes the order flow can clue you into that. This again, I'm not going to go over it. We had a few of them. You had it here as well. You see the whole day above VWAP, pretty much a slow trend. We had some change here, normal trend. So the market condition was always imbalanced. It's the rhythm changed here a few times. We went from, slow to normal to slow. Agreed? Okay, this day was very much again imbalanced, and we had some rhythm changes. Went from fast to slow to normal to, well, didn't really do much there, did we? You can see this was really just building quite a bit of balanced volume in this region. I wouldn't even call that imbalance. It was very nothing really, just went sideways. You'd have been very frustrated trying to take any imbalanced trades there, right? Okay, last 2, 3, 4 days I think, and then we're done. So again, here maybe overnight we tried some minor imbalances, and I've talked about this on obviously separate videos. In theory, you want to be changing, I haven't said this yet, I'm using 7,500. You want to be changing this probably to something like a 5,000 volume chart. Because can you see before, almost half of my page was being taken up by a day. Here, these days recently, I'm getting lots of little days on, and the reason for that is because of this. Obviously, you might be watching this in a few years' time, and then fine, it'll be different. But the time I'm doing this, obviously, we've had quite a bit of volatility in the market with the virus stuff and whatever going on, and therefore, what it was is volumes were really high a month ago or so on, because obviously there was activity in the market for whatever reason. People getting out of equity, long buy and hold equity positions. There was a lot of volume in the market, and what that meant is obviously I needed to have quite a high, like maybe 7,500, at times even 10,000 volume bars, because otherwise I would have had way too many bars. So I did increase it, but obviously I would suggest that you bring it back down again now, because obviously the volume's decreased, so you can see more bars. Okay, I'm not going to do it, but you can do that. So I've talked a lot in obviously other sections of the pro course about why I use volume bars and so on and so forth, but typically if you maximize it, I like to see about half of my screen to be one day. Here you can see 2, and the reason for that is I do like to see the previous day and how the previous day kind of happened, and then maybe I like to see the profile of the previous day and then the profile of the current day. I like to see both days. When I maximize it, you'll see I actually keep my chart somewhere here in the corner. So typically what I'll have is I'll have like the whole day, and then I'll have a little bit of the previous day as well. So that's how I do it. Obviously, don't do what I do just because I do it. Develop it over time. See what feels right to you, etc., etc. There's no right or wrong, to be honest, when it comes to even the volume bar settings. There's no magic. Sorry, just give me 1 second. So yeah, so again, this was just basically some sort of imbalance, then rotational, and then the rotational we had a breakout there, and then obviously we just went sort of sideways, isn't it? Did really nothing much on there. Very similar. Look at these days where we pretty much had an imbalance the whole day because you're under the VWAP, but you just had rhythm changes going on all the time, which did kind of make it harder. And towards the end of the day, it just went sideways, didn't it? Which would have frustrated you on both of these days trying to take shorts. So very similar days. Okay, this was fairly rotational, and then we broke out This was an imbalanced day that became reversal, right? Failed. Where did it fail? Well, let's establish the rhythm. This is why it's so important to get the rhythm was approximately normal. And it broke here. Maybe you could have got a short in, possibly. Don't know. Okay. Again, just know the reason I say, oh, you could have got a short. I just want you to recognize the market condition change. We went from imbalanced to rotational there, very much so. And how did we identify that? Rhythm changed completely. Sorry, terrible drawing, but just there basically. The rhythm changed. Do you see? And I know I keep saying this, but I wish I was told this. I wasn't. Do you see the way I'm doing this with my hand and whatever, and I'm trying to just say, yeah, it makes logical. Can you imagine a machine trying to do this? No. But on the depth of market, they'll kill us. This is why I recognized, later in my career that this is how I'm going to have to develop edge. I don't have that edge necessarily against algorithms, so on and so forth. Let me develop it here. So for me, this is very much how I define edge, and I hope me constantly saying that is clear that I'm doing it for your own benefit, because I want you to obviously start to think the same way that I do. Not in a sort of, it has to be like this because this happened. No, be fluid, allow yourself to make decisions. Why not? Be confident. This is very much rotational, and then we broke out towards the end of the day. This was very much an imbalanced day above the VWAP. Sorry, I'm being a bit incredibly poor with my drawing of lines. There, that's better, isn't it? VWAP. Can you see? The whole day was above, honestly. Let's be honest. This was an imbalanced day. Rhythm did change a couple times. We went into slow and then just kind of turned to mush there. So, you might have tried to get long and nothing really happened. Bit of a frustrating end to the day. Okay, so... And also, do you know what? There's nothing wrong with you saying to me, well, actually, do you know what, Envy? I've got a really strong conviction that the market's going to sell off at some point today. And actually, yeah, we're imbalanced the whole day, but I'm waiting for a rhythm change. So we went, we had obviously this normal trend, then we had the slow trend there. We could have had that opportunity because you're establishing. What I like to do is I just want to see it established, then I will take the opportunity. But we'll talk about this later. Then here, again, we built some sort of normal trend. When it failed, I got no problem with you saying, yeah, do you know what, I want to get short because I've got all this other contextual stuff up here, some sort of, I don't know, composites and whatever. VWAPs coming through of other time frames, and I want to get short. I've got no problem with you getting short, but guys, just recognize that we spent the entire day above VWAP, so you want to be scaling out massively. You want to be getting your position secure there. That's my point. Don't start getting aggressive in this environment for a rotation, because the market's clearly telling you spent the whole day above VWAP. Don't go for extended targets without scaling it. Yeah, you might make it and then you think, oh no. Probably just got lucky that happened, and maybe the entire market just bailed or whatever, something happened. But generally, it's not going to happen, okay? I've already said it. The mean is essentially the market in one number. So, it's telling you very valuable information. And when it's telling you that, use it. It's my opinion. Okay, that's it. We're done. That was the last. I got this one last day, and then we're done. So this was very much a rotational day, but obviously the rhythm was not so much a 2SD. It was more 1SD, wasn't it? 1SD, 1SD, 1SD. You see that your shorting opportunities would have been inside, and then we built this value above here with some volume. Broke out. Okay, breakout day. Alright guys, I hope that was very useful for you. Like I said, I know I said at the start I might do some CL, but don't worry about it. I'm going to do a lot of crude, Got plenty of examples here. It's just pointless me going through more. I'll go through market conditions and rhythm changes in crude oil. It's very similar, to be honest. S&P does tend to be much more mean reverting, don't get me wrong. But in terms of identification, it's the same thing. Honestly, it's identical. The personalities of the market, don't get me wrong, they tend to be quite different. In fact, very different. Crude oil can have market condition changes very quickly. Okay, so I trade it differently. But my point is the way I identify market condition and rhythm, it's exactly the same. Right? It's going to make no difference to you. And again, like I said, we'll do market condition and rhythm changes when I'm combining crude with the composite. So you're going to get it anyway. But rather than me doing double work, sure you appreciate it. I've shown you plenty of days. I want you to start doing this exercise for a little while. And yeah, I'll see you in the next section. Cheers.